Welcome to the deep dive. Today we're really getting into a key piece of tech in wealth management, Morgan Stanley's Next Best Action Tool, or NBA.
That's right. And we've got a lot to draw on reports from Morgan Stanley itself, analyses from places like MIT Sloan, Columbia Business School, plus industry sources like wealthmanagement.com, Investment News. Quite a stack.
It is, and our goal here is to, go beyond just the headlines about NBA. We want to understand the architecture, what it actually does, and crucially, how it stacks up competitively.
Exactly. For you listening in the financial services world, this is really about competitive intelligence.
Yeah.
How is a major player using AI to, well, change the game for advisors and clients?
So let's start with the basics. When did this whole NBA thing kick off?
It emerged around 2017, maybe 2018. But the key thing is, it wasn't an overnight project. Morgan Stanley had been working on the underlying capabilities, the in-house development, for over a decade.
A decade. Wow. So a long-term strategic bet then.
Absolutely. They describe it as the platform for personalized communication and engagement. And importantly, it's AI-driven, but designed from the ground up to augment their, 16,000 advisors, not replace them.
That augmentation point is crucial. We'll come back to that. It's often cited as one of the most advanced tools out there, right?
It is. Many see Morgan Stanley's AI and digital strategy as, pretty far ahead. And the proof is kind of in the pudding. Adoption rates are incredibly high. Over 90% of advisors using it daily.
90% daily use is huge. Okay, let's dive into the architecture. It's described as modular, data-driven. What's feeding this thing? What data are we talking about?
It's really about creating that 360-degree view. So you've got the basics, client profiles, demographics, goals, KYC,
The
info.
standard stuff.
Right. Then the financial core. Account data, holdings, allocation, transaction history, all of that. Plus market data, research reports from the firm, product information.
Okay, getting broader.
But here's where it gets interesting. It also pulls in client interaction data. Call logs, emails, website clicks, engagement patterns. That's key for understanding behavior.
Interaction data. So things like if a client's portfolio is suddenly heavy in cash, or maybe a stock they hold gets downgraded.
Exactly. Or even if they just clicked on a research article the firm sent out. Those are all potential triggers.
So how does the AI engine process all these different inputs? It started rule-based, I gather.
It likely did, yeah. Simple if-then logic.
Yeah.
But the real power came with the shift to machine learning. ML is much better at finding complex patterns in all that data, things a human might miss.
And it's scoring potential actions.
Continuously. And this is a critical point Jeff McMillan, their chief analytics officer, has made. It scores based on two things. One, the potential benefit to the client. Two, the likelihood the client will actually engage or transact based on the suggestion.
Benefit and likelihood. That
Yep.
sounds very practical, not just finding any opportunity, but the right one.
Precisely. It's looking for signals, market moves, yes, but also potential life events inferred from data,
Right.
changes in behavior, and crucially, it learns.
Ah, the feedback loop.
Positive responses, actions taken that all feeds back in to refine future recommendations. So it moves from generic suggestions towards truly personalized ones over time.
But with oversight, right. The advisor isn't just taking orders from the AI.
Absolutely not. Strict oversight for compliance and quality. And the advisor can always override a suggestion. That human-in-the-loop design is fundamental, builds trust.
Okay, so the AI generates these scored, personalized suggestions. How does the advisor actually see them? Is it like a separate app?
No, and that's key to adoption. It's integrated directly into their main workstation, the Wealth Desk platform.
Their central hub.
Right. The NBA insights are embedded. They might appear as recommended actions or alerts right there in the CRM view next to the client's info.
So it's part of their normal workflow.
Exactly. And because it's tied into the CRM and communication tools, acting on it is easy. If it suggests sending a report, the report is often right there, maybe even with a pre-drafted email.
Frictionless. Makes sense. It's an idea engine within the workflow.
That's a good way to put it. Data in, AI analysis, ranks suggestions, onto the advisor's dashboard, advisor reviews, takes action, communicates with client, and that action feeds back into the system. Continuous loop.
Okay, let's talk capabilities. Personalized idea generation is a big one. You mentioned Tom Davenport highlighted this.
Yes, it's considered one of the best at this. It goes beyond simple rules. It analyzes the specific portfolio, cash levels, goals, even behaviors, to suggest tailored investment ideas or wealth planning moves.
Like what specifically?
Could be anything from suggesting diversification for someone heavily concentrated in one stock, to maybe suggesting a specific bond purchase if they have excess cash, and rates look favorable. It could be a specific trade or broader advice like refinancing.
And it provides talking points, too.
Often, yes, drawn from the firm's research, matched to that client's situation. Makes it easier for the advisor to have that conversation.
That's powerful. Then there are the client engagement alerts. Less about investments, more about relationship management.
Exactly. This focuses on timely contact. Maybe it's a life event trigger. Someone turning 50 might get a prompt about retirement catch-up contributions. Or just a simple reminder if it's been, say, 90 days since the last contact.
So ensuring clients don't fall through the cracks.
Right. It handles some routine things too, like birthday reminders. But the core idea, as Jeff McMillan put it, is sometimes just reminding the client you're there and thinking of them is valuable in itself. Keeps the advisor proactive.
And this all relies on that 360-degree view from the CRM integration you mentioned.
Absolutely. The suggestions don't appear in a vacuum. They come with context, often supporting content like research reports. The advisor can then tweak the message, personalize it, and send it through the system, which logs it. It's like a smart layer over the CRM.
Does it integrate with other tools like planning software?
Yes, it can. For instance, if a change happens in a financial plan, built using, say, BlackRock's Aladdin risk tools, that could trigger an NBA suggestion for rebalancing.
Yep.
It's also tied into marketing systems for distributing approved content. Insight and execution, all linked.
And it supports outreach across different channels. Calls, emails.
It might even recommend the best channel for a particular message. And often, like we said, it provides pre-drafted emails or notifications for the advisor to review and send. Content sharing via the client portal or mobile app is also possible.
But the advisor is always the conduit, right? NBA isn't talking directly to clients.
Correct. It empowers the advisor. It doesn't bypass them. It streamlines those time-consuming tasks, finding the right research, drafting an email so they can focus on the actual connection. Many advisors essentially use it as their daily client outreach to-do list.
And the continuous learning piece, how does that work with advisor feedback if they skip a suggestion?
The system tracks that. If an advisor dismisses a suggestion, they can optionally say why, maybe not relevant or already discussed. That's valuable feedback for the AI.
Ah, okay. Explicit feedback.
Right. And implicitly, successful suggestions, ones that lead to positive outcomes like meetings or inflows, get weighted more heavily over time. So it adapts not just to the client, but also to the advisor's specific approach and what works for their clients. It measures what's effective.
Dynamic improvement. Okay, let's break down the types of insights, investment opportunities you mentioned, next best trade.
Yeah, that's a big category. Specific buy-sell ideas, maybe switching funds or ETFs, highlighting new issues, highly tailored stuff like suggesting diversification out of a concentrated tech holding after a run-up, or moving cash into bonds if yields rise.
Based on the firm's research calls, too.
Often, yes. If the firm upgrades a stock, NBA can identify clients who might benefit from adding it or increasing their position. The ML can surface ideas a human analyst juggling hundreds of clients might simply miss. Advisors find these really valuable. Drives revenue, too.
Then market-driven alerts, reacting to volatility.
Exactly. Monitoring market conditions and news to prompt action. Outreach during downturns, especially for clients with aggressive portfolios or those nearing retirement. Sharing the CIO's commentary when things get choppy. Maybe suggesting taking some profits after a strong rally.
Almost like having an assistant watching the markets 24/7.
That's a good analogy.
Yeah.
It automates identifying who's impacted and what the appropriate action might be. Improves trust when the advisor reaches out proactively during volatility.
Now, the life event triggers sound particularly unique. How does it detect those?
This is a real differentiator. It uses both explicit data birth dates, known family changes, and inferred data from transactions. A large withdrawal might signal a house purchase. Regular payments to a college might mean a child is enrolled.
So it suggests outreach based on those signals?
Right. Retirement milestones trigger RMD reminders. A new baby could prompt a discussion about college savings or life insurance. A client selling a lot of company stock might need advice on managing the proceeds after a career event.
Any more niche examples?
There was one mentioned about potentially recommending local resources and financial strategies if data indicated a child was dealing with a serious illness. That obviously relies on sensitive data being shared and handled appropriately. It pushes into holistic advice.
Helps with things like estate planning after a parent passes or insurance reviews when a kid goes to college.
Exactly. These build incredibly strong bonds, even if there's no immediate transaction. It shows the advisor understands the client's whole life, not just their portfolio.
Okay, what about relationship and service alerts? keeping the basics covered.
Mm-hmm. Tracking the cadence of contact, reminders for regular check-ins, maybe an alert if a client hasn't logged into their portal in a while. It can even flag potential service issues indirectly, like if a client complains, prompting advisor follow-up.
So it's scanning for potential friction points?
In a way, yeah. Or patterns, like if a client requests multiple statements, maybe they have concerns brewing. It helps maintain a high service level and handles the small stuff, birthdays, anniversaries, freeing up the advisor.
And then there's the cross-selling and financial planning aspect. This seems strategically important for the firm.
Definitely. It looks for broader needs. Morgan Stanley has a wide range of services, investments, lending, banking, insurance. NBA tries to identify where those might fit,
Examples.
suggesting deposit accounts if a client holds large cash balances, recommending insurance based on their risk profile or life stage. Crucially, using account aggregation, like through Yodlee, to see held-away assets.
Seeing the 401k at another firm or the big savings account at the local bank.
Exactly. That identifies opportunities, maybe an IRA rollover, or suggesting Morgan Stanley's higher yield cash options. It's about capturing more wallet share.
Which advisors presumably appreciate for business growth.
They do. And it can benefit clients by making them aware of solutions they might need. NDA works alongside other tools, like the bird's eye view for managers, aiming to increase that share. It leads to asset gathering or meeting unmet needs.
So with all these different types of alerts, how does the advisor manage the flow? How's it prioritized?
The interface highlights the top actions, usually with clear labels. Investment idea, milestones, service alert. Advisors can typically sort or filter, maybe focusing on their top clients or urgent items first.
What types of insights get used the most?
Insiders suggest the personalized investment ideas and the engagement prompts are heavily utilized. That high adoption rate speaks volumes. The everyday recommendations must be hitting the mark.
The delightful insights, as some put it, are the ones the advisor wouldn't have thought of themselves.
Exactly. That's the real augmentation. It shifts the advisor from being reactive to proactive. It's like having the firm's CIO or top analyst whispering suggestions in their ear.
Okay, let's walk through that advisor workflow in more detail. An advisor logs in. What do they see first?
They'd likely see an NBA dashboard or widget right on their Wealth Desk homepage. Maybe today's next best actions. It's a list, typically by client, with a brief description. Call client X about bond update. Email client Y the tech sector outlook.
And it's easy to use.
Designed to be. Often presents clear options, maybe multiple choice style. Invite to seminar, schedule portfolio review, send article. Simplifies the decision.
And they can see why the suggestion was made. The context.
Yes, that transparency is key for trust. It shows the underlying data or rationale, like potential mortgage refinancing could save $6 per month, or client is underallocated to international equity based on model. They can usually drill down for more detail the full research report, portfolio specifics.
So they review the context, decide to act. What happens next? How easy is the execution?
Very streamlined. As we mentioned, often there are pre-drafted communications email templates with subject lines, compliant wording, maybe linking to approved content from the library.
And the advisor can personalize it?
Always. They review, edit, add their own voice, then send it through the firm's system, which logs it for compliance. If the action is a call or meeting, NBA can help log the task or even integrate with scheduling tools. For events, it might handle invites and track RSVPs after the advisor approves.
Insight to action, all in one place.
That's the goal. Embedded in the workflow.
What about logging the outcome and the feedback loop we discussed?
The system records what happened, action taken, or if it was dismissed. If dismissed, the advisor can give that reason not relevant, already done, which helps the AI learn. Actions taken, update the client record, email sent, meeting scheduled, etc.
Useful for tracking and management too, I imagine.
Definitely. And it feeds future analytics trying to trace the impact of NBA touchpoints on later outcomes like new investments. Advisors can also snooze suggestions if they want to come back to them later. It's flexible use all, some or none. That respect for advisor autonomy really encouraged usage.
Let's use that example again. Morning login.
Okay. Advisor logs in, sees client Jane Doe share market volatility update. Context shows her portfolio risk level and the market drop. System offers an email template, staying calm in a volatile market.
Advisor tweaks it.
Right. Personalizes the message, hits send. Maybe Jane replies later thanking them that engagement gets logged. Next item. Client John Smith discuss expanding life insurance. New baby.
And the system knew about the baby from a note.
Potential, yeah, if the advisor logged it previously. So the advisor calls, congratulates John, mentions the insurance idea prompted by the life change, maybe schedules a follow-up meeting. Minimal prep time for very timely, relevant actions.
So NBA acts like that smart assistant, teeing things up with the materials needed.
Exactly. Reduces the what should I do today
Yeah.
burden and the time spent digging for info. Lets advisors focus more on the human connection. That's a huge part of why it's been so well received and seen as a productivity booster.
Let's go deeper on the data sources. We've touched on them, but the richness seems critical. Client profile data. How deep does that go?
Pretty deep. Static info like age, family, occupation, but also dynamic things like stated goals, risk tolerance, financial plans. Knowing someone wants to buy a vacation home allows for aligned suggestions. Even KYC data, like hobbies, could potentially flag relevant philanthropic interests. It digests the whole CRM record.
And the account and transaction data is monitored continuously.
Yes. Portfolios, transactions, balances, even credit usage through Morgan Stanley. Crucial for portfolio-specific ideas, like suggesting reinvesting cash, but also pattern detection. Regular withdrawals might signal an income need, a large one-off withdrawal, maybe a home purchase.
The AI might infer that.
It could. Or see a pattern, say, payments to an interior designer, and infer a home renovation, prompting a chat about financing options.
What about data from outside Morgan Stanley? Held away assets.
That's a big one, enabled by aggregation services like Yodlee, assuming client permission, seeing the client's 401k, their accounts at other banks, maybe even a spouse's accounts. That holistic view unlocks opportunities, IRA rollovers, finding better yields for their bank savings.
Does external data beyond financials feed in?
Potentially, within privacy limits, credit reports, maybe public records data, like news about the client's employer, and partnerships are key here. BlackRock, Aladdin for risk, Yodlee for aggregation, all integrated into WealthDesk.
Market and product data seem straightforward but vital.
Absolutely. Live market feeds prices, rates, indicators, plus the firm's own research and the full product catalog. NBA maps relevant research or products to specific clients. Rate drop. Identify clients with mortgages or bond ladders. New product launch. Find clients who qualify and might benefit. It aligns ideas with available solutions. Real-time data is critical. S&P drops 2%, the alert needs to be timely.
Now, the interaction and sentiment data, that sounds cutting edge but also sensitive. Call notes, emails?
Yes, this unstructured data is incredibly valuable. An advisor's note about a client expecting a baby leads to later suggestions for college funds or insurance. Tracking email opens shows topic interest. Website views too.
Phone call logs, voice tone analysis.
All logs showing duration or topics discussed could be inputs. Voice tone analysis probably more future state, but analyzing interaction patterns gives a picture of client interests and concerns, much like Amazon recommendations get better over time. Privacy is paramount here, of course, often used for aggregate patterns and service improvement. But this behavioral data sharpens the recommendations significantly over years.
And all this connects to a knowledge base, a content library.
Right. A centralized place for all the firm's research, commentary, guides. NBA plugs into this to pull relevant content for its suggestions. If it suggests talking about sustainable investing, it can pull up the firm's latest white paper on it.
Is this where things like OpenAI's GPT come in?
They're experimenting with using GPT as a separate AI assistant to let advisors query that document library using natural language, like asking, what's our latest thinking on inflation? Future potential could be asking the AI assistant, why did MBA suggest this action? And getting a natural language explanation referencing the data and research. It's all about interlinking data, content, and AI.
This level of data integration requires massive infrastructure investment, doesn't it?
Huge. A unified data repository, breaking down silos. It's the critical, maybe less glamorous foundation for NBA success. Data quality, consistency essential, and it's largely an internal build, tailored specifically for them. That customization is a key point, even if other firms use the NBA label.
So NBA really sits at the crossroads of all these data flows?
Exactly. And the integrations allow for that real-time action. Potential future links to trading systems for click-through execution or tighter ties to planning systems. It's not standalone. It's woven into the entire tech stack, workstation, CRM, planning, research, compliance, part of a bigger digital ecosystem. It leverages the full client picture, market intel, firm knowledge, all integrated via WealthDesk. Science and art data insights meet advisor judgment.
Okay, let's summarize the benefits for advisors and the impact on their practice. Productivity and time savings seem obvious.
Definitely a major one. Automating research, analysis, figuring out who to call and why. Advisors say it helps them come up with relevant ideas much quicker. takes routine tasks off their plate, allows them to handle more clients or spend more quality time with existing ones. It helps scale their practice, like having an extra analyst. Shortens turnaround times, frees them up for the human side listening, building trust.
Morgan Stanley pitched it as freeing up time for more valuable interactions, and that seems to have panned out.
It does. And that leads to more frequent and proactive client engagement, keeping clients happy and loyal. NBA prompts outreach for meaningful reasons, not just annual reviews or reacting to events.
And Morgan Stanley believes frequency of contact drives success.
It's a core belief. More touch points strengthen the relationship, preempt problems. If the market drops and the advisor calls first, that builds massive trust. Reports suggest clients of NBA users feel more engaged, better looked after, high satisfaction. Removes the advisor's mental load of remembering everyone.
Which ultimately should lead to better client outcomes and satisfaction.
That's the goal. Personalized, timely advice should mean better results, performance, progress towards goals. Clients notice the tailored attention, those wow moments when an advisor brings up something relevant but unexpected that builds loyalty. The high adoption rate implies clients are responding positively too, improves the quality of interactions.
What about the bottom line? Increased revenue, new business?
That's definitely part of the calculus. Identifying outside assets to bring in, spotting cross-selling opportunities that expand wallet share. The investment ideas generated by MBA can lead to more trades or allocation changes. Anecdotally, users report better growth net, new assets, revenue. It helps newer advisors get up to speed faster too, packaging the firm's knowledge. Might even lift the performance of traditionally lower-performing advisors.
And advisor retention, maybe less stress.
That's a real, if harder to measure, benefit. Reducing the cognitive load of managing so many relationships and data points, providing decision support, highlighting priorities, gives confidence that things aren't falling through the cracks. Like that example of detecting a parent's passing and prompting sensitive outreach. It alleviates some pressure. And because it's positioned as help, not grading, it reduces that fear of AI replacing jobs. It fosters that human-AI collaboration.
And that focus on augmentation, not replacement, building trust that was key to adoption.
Absolutely critical. Involving advisors in development, getting feedback, explicitly saying it's a tool for them, making it optional, allowing overrides. That overcame resistance. Advisors felt ownership, saw the benefits, and now many see it as indispensable. That high usage creates a virtuous cycle. More use, more data for the AI, better tool, more trust, more use. It's a competitive advantage just getting advisors to use it so consistently.
Any quantitative ROI data made public?
Not specifically, but the correlation with better client retention and growth seems logical, driven by efficiency and engagement. It strengthens relationships, which leads to loyalty and referrals, helps advisors deliver that high-touch service with less manual effort, institutionalizes best practices, improves consistency across the board.
And from the client's view,
they likely just feel they're getting more personalized, attentive service. They probably don't know AI is involved. They just feel their advisor is on top of things, understands them. It turns pain points, advisor overload, sporadic contact, missed opportunities into strengths, easier delivery of tailored advice, stronger relationships. Morgan Stanley calls it a new way of doing business. Human judgment plus algorithmic precision. Happier clients, more productive advisors.
Okay, let's pivot to the competitive landscape. NBA set a benchmark. How are others responding? Merrill Lynch.
Merrill, now part of Bank of America, has their AI-powered Insights program, similar goals, alerts, recommendations, tax loss harvesting opportunities, for example. They also look at transaction data for life events like spotting home renovations to suggest financing. They've integrated it with their Ask Merrill assistant and the client-facing Erica chatbot. Their aims are personalization, risk management, advisor productivity. They've targeted 2025 for having advanced AI tools fully embedded.
How do they compare, ahead or behind Morgan Stanley?
Industry watchers generally felt Morgan Stanley got an earlier lead on deep AI integration, specifically for wealth advisors, though Merrill had strong analytics in retail banking earlier. Merrill's new workstation, Project Evolution, includes AI. They also boast high adoption, likely driven by strong training. It's well regarded, but MBA just seems to have captured more industry spotlight and awards.
What about UBS?
UBS is definitely in the game. They rolled out MBA capabilities in Switzerland back in 2022, initially focused on analyzing digital banking behavior to feed opportunities to advisors there, both wealth and retail. Started more rule-based, moving to ML. They've been careful about the client perception, not wanting it to feel like spying. Advisors view and use the suggestions, similar model.
And in the U.S.?
They had plans for a U.S. NBA tool, tied partly to the tech upgrade around the Wealthfront acquisition attempt that fell through. So deployment in the U.S. seems more recent or perhaps less advanced than Morgan Stanley's decade-long effort. They're leveraging tech for prompts, especially for the mass affluent. Strong efforts, but maybe playing a bit of catch-up on the deep integration front compared to MBA.
What about others? Wells Fargo, JP Morgan, smaller players.
Wells Fargo is using analytics for NBA-type insights, often focusing on cross-selling within their large bank customer base. JP Morgan's wealth units Chase Private Client, JP Morgan Advisors, are investing heavily in big data and AI to prompt advisors using insights from banking relationships. And yes, regional broker-dealers and independent platforms are adopting tools too, often via fintech plugins for RIAs that flag things like RMDs or refinancing ops based on client data feeds. Generally newer or less deeply integrated than Morgan Stanley's custom system, though.
So Morgan Stanley is widely seen as the leader here.
Frequently cited, yes. Harvard Business Review, MIT Sloan Review Sloan call their AI strategy integration the best, ahead of UBS back in 2021, highlighting the efficiency and engagement gains. That 90% plus daily adoption by 2022 really stands out. Competitors definitely study their human-centric approach.
Any specific areas where competitors might differentiate?
Merrill's integration with the client-facing Erica chatbot is interesting. Morgan Stanley's breadth of use cases within wealth management and the sheer scale seem to be major strengths. And Morgan Stanley seems quick to experiment with the next wave, like the OpenAI GPT work, which could further extend MBA's capabilities, maybe through natural language queries. That innovative culture might keep them ahead.
So NBA remains a benchmark. Others are closing in, but Morgan Stanley has that first mover advantage and deep integration.
That seems fair. Merrill and UBS are serious competitors here. Clients across the industry are increasingly getting this kind of proactive outreach as these tools become table stakes. But Morgan Stanley has the reputation for pioneering this at scale. Their philosophy, human advisors plus algorithms are better than software alone, is now being widely adopted.
And having leadership champion it early helps embed it culturally.
Immensely. Andy Saperstein, head of wealth, was a big backer early on. It's part of their advisor culture now. The gap might narrow, but that head start allowed years of refinement with real data and feedback. Expect everyone to have an MBA platform, but Morgan Stanley's will likely keep evolving more real-time, more predictive, maybe even selectively client-facing to maintain an edge.
So wrapping this up, Morgan Stanley's Next Best Action platform really stands out as a major advance in wealth management tech. It's leveraging AI to genuinely augment what advisors can do across, well, almost everything they touch.
Right. Its success seems built on that incredibly comprehensive data integration, the sophisticated AI that learns, the way it slots right into the advisor's workflow, and that deliberate focus on empowering the human, not replacing them.
And competitively, its development and success have clearly pushed others like Merrill Lynch and UBS to accelerate their own AI initiatives. It highlights just how strategic these AI-driven insight engines have become for advisor productivity and ultimately client engagement.
Definitely. While others are making strides, Morgan Stanley's early lead and the sheer depth of NBA's integration make it a really powerful case study for anyone in the industry thinking about AI.
Which leads to a final thought for you, our listener. As AI gets even better and data becomes even more abundant, where do these next best action platforms go next? Could we see them interacting more directly with clients? Or will the focus stay firmly on empowering the advisor? And, of course, what are the ethical lines as these systems get even better at understanding and even anticipating our needs? Lots to consider. Thanks for joining us on The Deep Dive.